Good morning and a very warm welcome to the JSE. I'm joined in studio by Lourens, the CEO of Onelogix Group, to take us through the group's interim results. Ian, thank you very much for your time this morning. Headline earnings for the 6 months to November of 7 cents a share from 8.3 cents in the prior period. Can you perhaps take us through your thoughts of the next 6 months, looking forward? What do you think the group is going to achieve, given that traditionally revenue is weighted to the first 6 months?
Yes, thank you very much. No, we're quite positive for the next 6 months. We think that we're going to exceed that we did last year, and therefore we're probably likely to exceed the HEPS figure that we finished off with the year for last year. So we're pretty buoyant for the remaining 6 months of this year.
And in terms of divisional performances, Postnet and the vehicle delivery services stood out. Do you see growth in margins for these divisions being sustainable into the next 6 months?
Yes, in fact, Postnet has just simply shown empirically that over the years it sustains its operating margin, which is well over 35%. It just simply sustains it through thick and thin. VDS, which is our vehicle delivery service company, obviously when the motor vehicle market was down, it affected its margin, but the margins are bouncing back pretty well, and we expect those to sustain themselves as well going forward, certainly for the next 6 months, but beyond as well.
The group generated 5.2 million rand of cash during the interim period, which brought the cash on hand up to 32.6 million rand for the interim period. Can you take us through the group's strategy in respect of any acquisitions going forward?
Well, we're always on the lookout for acquisitions. We've made 2 in the last year and a half. We look clearly for businesses that occupy niche space in the logistics industry. That's our strategy. We've made an acquisition with RFB and most recently Atlas Panel Beaters. They fulfill those criteria. So we're always on the lookout for acquisitions. Now, I must also mention that the development of our business is such now that a lot of our capex is actually completed. And most of the capex, in fact, we've been funding out of cash, our own internal generated cash. So our balance sheet in terms of the general liquidity should look a lot better going forward. And I'm sure we'll talk about it just now, but that's one of the reasons we were able to declare a distribution of profit.
And then speaking about the Atlas Panel Beaters business that the group acquired, can you take us through the prospects for this business and any cost savings that could be derived from Atlas Panel Beaters?
Yes, as I said, it's a niche operation. It's not a general panel beating business. It only deals with commercial vehicles. Typically, those are trucks that probably exceed about 3.5 tons and upwards. A very specialized business, a long-established business with a long, good track record with all the insurance companies and the original equipment manufacturers. It makes a lot of sense for us because we move a lot of vehicles, particularly heavy trucks, with our company CVDS. It's another string to our bow that we're able to offer those manufacturers. Atlas Panel Beaters will only started generating income from 1st of January of this year. It's got a long track record of profit in any event, so it's going to contribute positively, virtually with immediate effect.
Okay. Speaking about the group's capital distribution declaration of 3 cents a share for the interim dividend, is this something that investors can look forward to going into future periods?
Yes, we haven't made it a cast in stone policy. But certainly our view is that we're keeping an eye on how our general balance sheet is looking. We're going to declare a dividend with regularity.
Okay. All right. Ian, fourth quarter GDP numbers for the South African economy are set to be released in a very short while. From your experience, do you see a pickup in business activity in the local economy?
Yes, we definitely do. I suppose one of the leading indicators is motor vehicle sales, and of course vehicle delivery services and commercial vehicle delivery services, which is we call CVDS, has noticed in the last period a bit of an uptick, and we think and we hope certainly that is sustainable. I think it's going to be obviously a protracted growth over the period of time, but yeah, we notice an uptick.
Okay, so this is something that investors can look forward to, growth in headline earnings, hopefully from strong performances, Postnet, as well as the other acquisitions.
Yes, we think so.